So this is a remarkable winning trade based on order flow concepts, volume profile and footprint charts. In the weekly volume profile, there is a high volume node. The daily volume point of control is over here. Price to retrace into this high volume node for us to take a trade. If I zoom the chart and go into the footprint chart, you can see strong negative delta printed in this down candle, which confirms more powerful sellers activity in the S&P 500 chart. Big banks and smart money and institutes have placed their sell orders in those areas. Analyze the bid-ask volume profile footprint chart. High volume red bar is printed over here. So we placed our sell limit order, second take profit into this area, strong green delta being printed and the candle also being a bullish candle. So that is where we take our second take profit, which are institutional order flow analysis techniques. So this is a remarkable winning trade based on order flow concepts, volume profile and footprint charts. So we were monitoring the micro mini Nasdaq index futures. So you can see the price pushed up and then price strongly pushed down, and you can see in the push down there is high volume nodes build up. It's a strong push up, and you can see range build up and then price push down and another range build up and a price push down. So it's a strong price push down with a high volume node, and you can see this light orange color volume profile is the weekly volume profile, and you can see in the weekly volume profile also there is a high volume node in that same area. So based on that fact and also looking at this day, for this day the daily volume point of control is over here, and when the price pushed down from here, it was pushed down with strong volume, with high volume. So based on that facts, what we were looking for this day was the price to retrace over here into this high volume node for us to take a trade. So that was our trade idea 1. Then when we look at micro E-mini S&P 500, it had a similar structure. If you look over here, the price pushed up, then similarly range build up and a strong price push down, and you can see in the price push down there's high volume, and you can see a high volume node over here. So based on that fact, also we can see the weekly volume profile, light orange color high volume node is also over there. So the trade idea was for the price to retrace up to this high volume node and then for us to take a trade. Now this is again the micro mini Nasdaq index futures chart. However, you can see when the market start at 9:30 over here, the price did not push all the way to this high volume node. Instead of that, the price has already started ranging in this area, and you can see at 9:30 here a strong displacement towards downwards, and this is due to news release at that time, and you can see it's with high volume. So due to that strong displacement and high volume, then what we were looking for was, once it pushed down in this candle, we were looking for a retracement into this area for us to take a trade. So now let's use order flow concepts and footprint charts to find a suitable entry point. So what we did at that moment was we went into the footprint charts. So what I'm doing now is I'm zooming the chart so I can see the footprint chart. So in the footprint chart, when this price pushed down, you can see negative delta red areas, which confirms strong selling activity. So now I will again go to the candlestick chart. So then what we did was we wait until the next candle completes to confirm direction of the price. So this is the 30-minute chart. So when the second candle printed, we can see the second candle also printed negative delta, and also the second candle closed below this negative delta area, which confirms us that this is a seller's market. And now let's look at the concept of the price absorption. So you can see when this candle finished printing, it formed a wick in this area, and if you check the cluster chart, in that area you can see green color delta, which means buyers gave one more try to push the price up. However, they were unable to push the price up. That is why the wick has been formed, which means there's a wall of passive sell orders sitting here. There's a large amount of sell limit orders sitting here. So that is why it formed a wick. And this confirms us that this is a seller's market and sellers are strongly defending this price area. Now let's look at absorption in the S&P 500 chart. So now if you look over here, when this candle finished printing, it generated a wick. So if you look at that area in the cluster chart, footprint chart, you can see there's green color delta printed. What that means is buyers tried one more time to push the price up. However, they failed to do that. That is why the price again pushed down and wick is generated. What that means is in this area there's a strong amount of sell limit orders sitting. So strong passive sellers are sitting here and strongly defending this price area. So that is why the price pushed down, and this also gives us a clear indication that this is a strong seller's market and the sellers are defending this price. Okay, so then what we did was we went again into the then ask volume profile cluster chart to confirm where the high volume is. So you can see in this area a red color high volume bar is printed. So that is where we placed our sell limit order. So we place the sell limit order over here and the stop loss above this candle. However, when we decide the take profit, you can see, because if I go back to the candlestick chart, because there's a chance of price reversing or stopping in this area, our first take profit we were targeting in this area. But you can see in that first take profit, the risk to reward was not sufficient. So we at least look for a 1-to-1 risk to reward for our first take profit and then to continue the trade into higher risk to rewards. But you can see we don't see that 1-to-1 risk to reward over here. If you would like to learn the trading strategies we use, click the link given in the description below to access the full free course and use that knowledge to get funded and start trading like a professional. So then, due to that fact, we check the micro E-mini S&P 500 chart. So you can see in that same area of the micro E-mini S&P 500 chart, if I zoom the chart and go into the footprint chart, you can see strong negative delta printed in this down candle. So this is very strong negative delta compared to the micro E-mini Nasdaq index futures. So if you go to the micro E-mini Nasdaq index futures, and if I again go into the bid-ask delta colored cluster charts, you can see this negative delta printed. Compared to that, in the S&P 500, you can see it's a very strong red negative delta printed, which confirms more powerful sellers activity in the S&P 500 chart. So then what we did was we waited till the next candle completes. So when the next candle completes, we can see the next candle closed below this high volume red negative delta. So which confirmed us that it is a seller's market and sellers are in control. So big banks and smart money and institutes have placed their sell orders in those areas. So then what we did was we looked into the footprint chart one more time and we analyzed the bid-ask volume profile footprint chart, and then we can see a high volume red bar is printed over here. So we placed our sell limit order at that price point and the stop loss to be above this candle. And you can see in this instance, we have our minimum starting 1-to-1 risk to reward trade for us to take our first take profit. And then we will continue this trade for higher risk to reward if it's a winning trade. So due to that fact, we place the sell limit order, and you can see in this case, the price came and tagged our entry. Whereas if you look over here, in the micro E-mini Nasdaq index futures, it did not tag our entry. However, we will not take this entry because we will give priority now for the S&P chart due to the facts I explained earlier. So it came and executed our sell entry, And you can see after that, after a couple of candles, it hit our first take profit of 1 to 1. So we took partial profits over here. So we took our first take partial profit over there, and now let's see how we manage this trade with risk management. So once the next candle, strong down candle printed, we moved our second take profit into this area. However, we were monitoring this price point when the price stopped over here, and when the next blow candle started to print, we again reached the cluster charts. We again check the cluster charts, and if you look the delta colored cluster chart, we started to notice green delta being printed. So strong green delta being printed, and the candle also being a bullish candle. So that is where we decided to take our second take profit for a remarkable 1 to 2.5 winning trade. So this was a remarkable 1 to 2.5 winning trade using volume profile, order flow and footprint chart concepts, which are institutional order flow analysis techniques. So we hope that this was an insightful trade analysis for you all, and we will see you all soon in another trade analysis video. Take care. If you would like to learn the trading strategies we use, click the link given in the description below to access the full free course and use that knowledge to get funded and start trading like a professional. Okay, so it's end of the video, and we will see you in another video.